Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. In today's segment, we will be discussing why money flow could be changing today. Because what we've seen last night may not follow this morning when the Europe starts trading and when we see that momentum really picking up. So let's begin with what happened over in the US. We've seen another stellar rallying because investors are just too optimistic that the People's Bank of China has what it takes to soften the blow from this coronavirus and provide that extra cushion for the economy that it really needs. And it is only because of that we've seen the Euro Stoxx 600, making another record highs, Euro 50, Euro Stoxx 50 also, and other European indices also pushed higher on the back of this particular momentum. But now, after Apple revealed that the revenue forecast for the first quarter isn't going to be matched because of the supply chain issues, because of the softer demand issues also, concerns over in China, it won't be able to meet its revenue target. The market has been completely jolted with this particular news. But here is my qualm with respect to this, why we have these concerns. I think market is completely overreacting to this particular incident because Apple, Burberry, along with many other companies, they issued warnings. They provided us this guidance. They provided us this particular range that we talked about before in our previous videos. That okay, this is how far it is gonna go. And then yesterday's revenue forecast that they said okay, we won't be able to meet our revenue targets, but because of the supply chain issues and so on and so forth. But whatever, the number is still within the range what they've defined before. So now market just completely taking this news as a wild card. I think it is just overreaction because we are seeing this overreaction over in Asia because markets are completely off the racks. I see Hang Seng, I see Shanghai Index, Nikkei Index, all of them are substantially down. And this is what pulling the European futures down today as well, but over in Europe, right? But I think we should be more focused on what People's Bank of China is capable of doing and what it has done previously. Because the People's Bank of China is fully committed to providing support through fiscal and monetary policies in terms of tax cuts, in terms of running the non-performing, letting banks run the non-performing loans, run for a bit longer than what they were previously anticipated, lowering the interest rates. I think these kind of measures perhaps triumph any other uncertainty which is related to corporate earnings. I think this is a very much a short run play. In my opinion, the stocks which are really exposed, which is like the list is absolutely enormous according to CNBC's report. I think the entire sentiment, this is going to be very much short-lived. So yes, for now, the sentiment is negative. It is adverse. Market is trading in a deep red territory. But I think for those of you who understand that this is nothing but just an overreaction, because it is not new, we were already told that look, this is something is going to happen. Now that news coming up and market reacting this way is nothing more. And speaking specifically about the European markets, if you look at the Euro Stoxx 600, put a standard deviation chart on a daily time frame and change the standard deviation to 2 on the upper and the lower band. I've done extensive technical analysis video on this one. Please do go and have a look at it. The opportunity is there. The opportunity is really crying out for investors that please look at me, there's an opportunity to sell, and that signal came yesterday. If you can trade futures, I think you can get into the game a little bit earlier than everyone else and then let them run towards this 50-day moving average. But in order to understand all of that, please do go and watch the technical analysis video to get all the nuggets from that. In terms of economic docket, we don't have much, but it's the German ZEW sentiment coming at 10 a.m. UK time. keep an eye on that. I think that is a very critical number that can really ease off some of the pain that the euro is feeling against the G10 currencies, especially the dollar index. Remember, yesterday we talked about the short bets. They are, the long bets, how leverage funds, they are scaling back on them. I think the time is about to come. But as of today, we may see the inflows coming back in because dollar may very much act like a safe haven. Moving on to commodities. Gold made that substantial move to the upside, which we talked about. It touched at 1586. Still holding on to my target of 1600. I think it is very likely that we're going to see it in a couple of weeks or so. For oil, the move is very much a textbook move. It is Brent and crude. They are moving towards the downside, both down as of now nearly 0.5 to 0.4% respectively, and I think this downward move may continue as long as the coronavirus cloud become even more dark from here. That's all from today. Thanks ever so much for watching, and see you guys tomorrow. Thank you.